Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning, as usual, on October 4th. So there's been a lot of news this week as I record this. It's been the jobs report today, but that was kind of the least of it, right? We had obviously the Middle East attacks and fears of counterattack, so to speak. You had the dock worker strike. You had the dock workers kind of a short-term deal or whatever for the next few months. So you had a lot of ups and downs in the news. Honestly, the market really didn't do that much, though. I mean, I think net right now, the big cap indexes are down, flat to down, less than 1%. Small cap index is down a little bit more, but leading stocks did okay this week. So all in all, it's kind of interesting from that point of view. I don't want to come on here and say the same thing every video, but my thoughts really haven't changed in the past month and a half to 2 months. It certainly seems through the market's action that big investors are putting some money to work in certain stocks, certain areas. There's some leadership that's developed. Some things have rounded out, launching pads. A lot of stuff is broken out on the upside. Nothing's really, very little is running away on the upside, but it's broken out. Things are making some progress, that sort of thing. At the same time, when you look at a variety of indexes, growth funds, a lot of different measures, a ton of stuff and stocks and sectors are still battling with, multi-month resistance. They really haven't gone anywhere. They're sort of positive but not powerful, that sort of thing. So we really haven't done that much. We're just kind of following the institution's lead. If the institutions start to let loose in terms of the buying, we'll do the same thing. If they really pull in and start doing selling because, something comes loose in the system or the election or whatever, we'll follow that lead too. Right now, we haven't done much the last couple of weeks in Cabot Growth Investors model portfolio. We're still about 30% cash. The stocks we own, we really like. They're acting well for the most part. Some are acting great. I wouldn't mind. I might put a little bit more money to work, but in terms of going from 30% cash to 25, sure, but from 30 to 5 or 0, yeah, we're waiting for more stocks to break out, more growth stocks to break out, more growth measures to break out. It could happen. It doesn't have to wait for the election. It could happen next week. It might not happen at all. I still think the next big move is up, so I think it will happen, but it's just a matter of sort of getting the timing right, because if you're a little early in some of these stocks, they can move around 10 or 20%. So in that case, so right now we like where we're at, but we're just keeping an eye on it day to day. We like the action of leadership. We just need to see a little bit more strength and probably a little bit more breadth among the leadership to really floor the accelerator. Okay, let's hop in the charts. As always, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. As usual, we'll just kind of go through the indexes. So the two of the major indexes, actually should have started here with the S&P. The S&P up here and the New York Composite, okay, they look fine. Kind of, higher highs, higher lows. Again, you wouldn't say it's, it's not 1999, but that's okay. Kind of 3 steps forward, 2 steps back sort of thing, okay? The rest of the indexes, though, are they're positive. When I say positive by our measures, they're above their intermediate term moving average. This is 25 and 50-day simple moving averages. But they're not, they're still kind of not much change from a few months ago, right? And then, of course, the small caps, that's the NASDAQ right there. Small cap, same sort of thing. Mid cap, same sort of thing. Now, it's not a bad thing. It's not like, oh, they haven't gone anywhere. That's super bearish. It's a major top. That's not what I'm saying. I'm just looking at it the way it is, which is that, they're kind of getting up to resistance and not really breaking out. They're not getting crushed either. It's not like they get up to resistance and then fall like that. That was like 2022, right? This is more like they get up to resistance and tighten in here. Ideally, and I've written this, and the market doesn't care what I want, unfortunately. It would be nice if it did. Ideally, this is sort of late September, October shakeout, bad news, whatever, where we get a lot of bad news, a lot of bad headlines, a lot of worries. Sentiment comes down, but the market and leadership doesn't really budge much. There might be some bad days here and there, but you know what I'm saying? Where you get this sort of action, just to use this sort of chart, and then all of a sudden, whether it's the election or before the election or after, or earnings season, right, which is coming up quick, you get the breakout on the upside, not just in the indexes and the growth measures, but, individual stocks too, okay? Again, I don't want to beat a dead horse, but, QQQ, if I can type this correctly, equal weight NASDAQ 100, just kind of $90 here again this morning. As I record this, I tried to get there, kind of met some selling, right? The IPO fund, Looked a little bit better here. Just a kind of a risk on measure, right? Growth measure. Pulled back in here. Certainly looks okay overall. Again, positive, but not super powerful, right? Compared to the last couple of months or 6 months. So there's just a lot of that sort of action going around IBD 50 indexes. We could go on and on. Okay, same sort of thing, right? So I like the action. I like the action among individual stocks. I think the setup is there, bigger picture, but we're just still kind of, the cake is still in the oven, so to speak, okay? A couple other things before we get to individual stocks, or as we get to individual stocks. I will say this week, this is a secondary indicator, but we talk about it most weeks, so obviously I'm watching it. XLP finally, this is the consumer staples, gave up some ground. I know on this chart it doesn't look like much, and big picture it's not a huge, right? It's just down to the 50-day line, but it did lose some ground here finally, which is interesting. XLV, which is sort of big, generally speaking, kind of like big defensive safe healthcare sort of thing, not like biotechs, but big companies. That's obviously been losing a little bit of steam. XLU, to be fair, the utilities have not. They still look obviously in a firm trend, but just keeping an eye on this. Maybe we get again some October, maybe as a rotational or a shift where we see some of these defensive sectors finally giving ground, and some of these growth measures, which are they're firming up near their highs, really get going. Okay. The other thing is, I know there was a good unemployment report this morning, but the low, this is Treasury rates. This is a 10-year note. It's a messy chart. I can't get rid of a lot of this stuff, unfortunately. But suffice it to say that, the 10-year note went from, it fell. It's been in a downtrend from, call it 4 3/4 to 3.6, so over a point here over many, many months. But the low in it was really when the Fed cut rates a couple weeks ago. And since then, it's been kind of going higher. And then today on the jobs report, it's really breaking up through the 50-day moving average. So just from like an intermediate term trend perspective, you'd say the downtrend is either broken or, definitely bears watching, right? And that could have an impact on the market as a whole, number one, meaning like the Fed won't be able to cut as much, and obviously rate sensitive stocks, which we saw some opportunities. Obviously there's like home builders, but even some like bull market stocks. I've mentioned Blackstone. Now Blackstone looks fine in here. It's right to the 25-day line, but you're right at that point where if rates start going higher from here, like is something like that has a bunch of real estate going to get hurt? Okay, Zillow was another one. We wrote about this in Growth Investor last night. I think this is an interesting turnaround situation. You can kind of see this, multi-month, whatever, year-long breakout. Some good volume clues down here. It's the leader in the field. It's been solidly profitable the whole time, which I think is kind of impressive given how slow housing's been the last couple of years. But now it's kind of like, is this a group, the bull market stocks, the real estate stocks, the obviously home builders, but all the equipment, all the supply names that go into that, are they going to be, just kind of dripping lower here if rates go down? Is it going to weigh on the market in a lot of these sectors or not? So that's just something I am watching. I do think it's clearly sort of a contrary play, right? Where the Fed has this bigger than expected rate cut. What happens? The 10-year note is up 1/3 of a point in the past 2.5 weeks. So if that continues, obviously, probably not the best. But we'll see. These are secondary measures, but just things I am keeping an eye on. In terms of individual stocks, I haven't seen a lot of like breakdowns or breakouts this week, which again, I do find kind of interesting. I don't want to say encouraging, but just kind of, it's interesting giving all the news and all that sort of thing, okay? So here's Samsara. Now, this is the one that's a great story, IoT, great story, but huge valuation, $26 billion, okay? It's like 20 times revenues, which I'm not a valuation guy, but you do keep an eye on it, like, okay, can this double? Can it become 50? Can it become 75? I think it can, but you'd prefer it to be 15 instead of 25, right? But either way, the stock looks like it changed character. It had 3 big volume weeks in a row after earnings to the upside, new price peaks, new relative performance peaks. And now it's been pulling back to the 25-day line on pretty tame volume here, and it's starting to pop up again. It's up to you, but just it's a possible pullback resumption pattern. Obviously, all this stuff is assuming the market hangs in there, but IoT is still on my watch list. Flutter Entertainment is FanDuel and Betfair. Okay, not as dynamic, but just a nice, really nice base in my opinion. 3 waves down, and then it just went up whatever weeks in a row. It had an investor day last week, and that was this spike here, but up here was sort of 250 round number resistance, if that's what you want to call it. and it's been dripping lower on lighter volume. I think it looks fine. I mean, who knows? But it looks fine here. And again, this is sort of setting up to be one of these pullback and ideally resumption buy patterns where it's early stage. It just broke out back here. There's no major selling. It's not like you're buying some pullback that looks awful. The stock is really acting abnormally. So that's kind of interesting. Just kind of going around the horn here, there's a bunch of names. This is GE Verona, which is sort of one of I think it's going to be the institutional play or one of the institutional plays on the power trend. Of course, there's the utilities and stuff like that, data centers, AI, all this. But this one's sort of got a hand in all the cookie jars. Just really impressive here. I don't really have a buy point or anything, not that I'd put it on the video, but just, straight up 25%, right? 20 to 25. Can't pull back much now. It's hitting new highs. At some point it will pull back or chill out, but just a name to keep an eye on, GEV. In the retail space, variety, this is Boot Barn. It's been trending higher here for, you can kind of see it's been trending higher here, had the correction in the summer. So it's not intermediate term, probably not in the first inning, but it continues to act well as kind of results pick up steam. And you can just see, again, just in the last couple of weeks here, while the market, late September, early October news has, I would say the market's wobbled. I think that's fair, just a little bit of a wobble. The stock hasn't budged at all and remained very tight. That's kind of interesting. Instacart, or not Instacart, this is Maple Bear, but it's Instacart. That's their main business. Just continue to see, this is kind of what we're seeing is one reason we haven't been buying is I haven't bought much the last couple of weeks is of course I'm watching 30 stocks or whatever, but there's probably 3, 4, 5, right, that you're kind of, hey, I might really want to buy this. And the ones we've held off on buying, they're not going anywhere. And I'm not saying Instacart or Maple Bear is one of them, but we're seeing a lot of this action where, it kind of breaks out, has a 2 or 3, 4 good days, clear, nothing wrong with that. I mean, really nice action, part of a bigger structure. If you look at the weekly chart, right, breaks out. But now it's just kind of, chopping around basically. So it's not like things are running away on the upside. There's a couple, obviously. We own a couple, thankfully. But for the most part, it's setting up here. But I do think it looks pretty nice, Maple Bear. And it's got this nice post-IPO base, and it's got some sponsorship now, so on and so forth. So pretty good. This is just, I like to keep an eye on some of the old, quote, old names like Cloudflare and Datadog and, some of these things that were winners back in the day. Because some of them come back. A lot of them don't, but some of them do. This is Shopify. It's not, this is not my favorite type thing. It probably won't find its way in the portfolio. But I keep an eye on it because they are sort of popular stocks, and some of them do come back, maybe 1 or 2 out of 10. And Shopify, there hasn't been much buying volume of late, but it had this wild, huge decline and huge shakeout. This was on the market's August, crash and recovery. And really since that, you can see this wild dip and the whole thing from 70 to 50 in 2 weeks or whatever. And then just a wild recovery. And really since then, I'm not saying it's like perfectly under control, but it certainly acts like the weak hands might be out. It's kind of tight in here. Of course, they got earnings here in another month, I guess October 31st, Halloween. Enjoy that. But, the longer it can kind of hold up here, the greater the odds it can extend to the upside. Some of the bull market stocks I still like. So this is Robinhood. I mean, we own some back here, and we talked about it. We got wiped out. The thing went from 25 to 14 in 14 trading days. I mean, I'm not saying we didn't sell at the low or anything, but, it wiped out everybody. Again, since that action, it's been just acting very properly in here. It's still volatile. It's still choppy. It still has a little bit of a leverage to Bitcoin. Interest rate cuts will probably affect interest income, but just sort of stepping back from all the daily wiggles. To be honest with you, another week or 2 or 3 in here, and then a breakout attempt, and the market's in gear. I mean, I think, business is very, very strong. You can see with the numbers. So Robinhood is kind of back on my watch list. But there's plenty of others that are kind of ancillary. This is TradeWeb Markets. Just looks very good. It's kind of not a popular name or something where everyone's talking about it, but some of these things look good. On the networking front, so I still think, I wanted to mention this. Here's Nvidia. Am I negative on Nvidia? No. Do I think the numbers are going to be huge? Yes. I mean, I'm not saying that at all. What I am saying, though, is the stock originally broke out at $20. And here you are at 120. Hopefully it goes to 220. And I think, I think there's a chance it could. I will say they had a lot of good news this week, the CEO said some stuff. And it's not really reacting quite yet. And it's not really an Nvidia thing, to be honest with you. It's more of a chip stock thing, which, again, they just had such a big run. I just wonder if they just maybe they need for the rest of the year to calm down. I mean, that would be totally normal. So I'm not predicting anything. Trust me, a couple of good days on Nvidia. You come in next week and it's up here. It's like, hey, this looks really good. It might be ready to break out. But just something I'm keeping an eye on in that sense, okay? Conversely, the reason I mentioned chip stocks is I have seen more like networking names look good, and Coherent, it wasn't one of the original leaders, which always makes me a little nervous, like Arista was and stuff, but it clearly broke out here, and since breaking out at $80, it's been very strong, and hitting new highs today as I record this. You can see it's kind of had this, not an amazing history, but finally got going here, changed character, the volume's in all the right places, the earnings estimates are huge. So COHR is an interesting name. Couple more names, just some of these boring, but call it infrastructure. Some of it's a little housing related, but it's like, whatever. It's more, I guess infrastructure is probably the best way to put it, but like MCore, EME, just kind of a little bit of a sloppy pattern, but multi-month pattern, kites to new highs, holding firm. Sterling infrastructure, obviously this is more infrastructure. STRL, kind of a sloppy consolidation, but then you just have this rush of 6, 7, 8, 9, 10 days in a row, whatever the hell it was, and then just sort of holding tight here with the market. So you're just seeing a lot of these sort of old, are they going to double? No, probably not. Can they have good runs? Probably. That look pretty good. And last but not least, I did want to mention, this is FXI. You could look at whatever you want, FXI, KWeb, Alibaba, whatever. But, China's the most hated thing on the planet for good reason. You can see FXI here just on the monthly chart was at, I don't know, call it 55 here at early 2021. As of a couple of weeks ago, it's at 25. And that's one of the better looking Chinese ETFs. And now you can just see it's obviously changed character and come to life. Would I be chasing it? Me personally, no. But I would be keeping an eye on it. Maybe it consolidates for another couple months. Maybe it takes off. But China, between it being hated, between the bazooka of liquidity that central bank is unloading, and with the possibility that our markets can get going here too, like the whole world. It's just what I see as an opportunity. So just keep an eye on China, keep an open mind. I know it's had a huge run. You say, well, I'm not going to buy it, Mike, after it just went up 30, 40%. Well, after years and years of no progress, this might be just obviously the first inning there. And my guess is it is, and that looking a year later, some of these things will be a lot higher. Okay, but back to the market, it's the same thing. Listen, I'm interested, I'm intrigued. The NASDAQ, which of course is weighted to big cap stocks, but again, a couple of good days from here, and it's like, hey, wow, maybe we do have a lot of breakouts next week, But at this point, it's still been a few weeks where things look good and then they kind of pull in, and then things look good and they pull in. Individual stocks, I think, look better than the indexes and some of the growth indexes. But I'd love to see something like, the equal weight. Don't get me wrong, I'll take my clues from individual stocks, but I'd love to see like a QQQE breakout on the upside, or the IBD 50 index, and a few new names break out. Of course, we have earnings season coming up, and I think that will be key, okay? But for right now, I'm sort of leaning bullish, but going slow, picking our spots and our stocks carefully, which I kind of get the sense that institutions are doing right now as well. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.